All right, guys, we are here today. It is PPI inflation day today. It's the second day in a row where we get inflation data coming out yesterday. It is PPI inflation. It's the second day in a row we get inflation data dropping. Yeah, it's time. We'll see what we get. Let's see what we got. All right, there we go. We're live. What's up, Pawn? Your kids are back at school, Pawn? Already, bro? And mine are out until, next week. So, honestly, I'm ready for summer. I told my kids the same thing. Like, I've gotten more stuff done since they've been home than when they weren't home. Like, we cleaned the garage, we painted the roof, we did a bunch of stuff that we needed to do. And, yeah. Feels good, man. Cheers to adulting. And we got inflation data going live today. Let me fix these. Yesterday, CPI inflation came in at 2.8%. Today, PPI inflation live at 8:30. Expected at 0.3%. And then I put the CPI numbers live on the screen as well here. There we go. Hey, what's up, Beach Bum? I'll give you a shout out a little bit later, Beach Bum. It's too early. We only got 100 people here right now. And so, I can do it right now. But remind me later, I'll do it later. It'll get you a lot more engagement later on. Oh, they haven't had spring break yet. Okay, gotcha. Oh, yeah, the weather days. That sucks, man. Yeah, honestly, I've had so much stuff to do, bro. Like, and it's just wearing on me, dude. It really is. It's just wearing on me. I have like this list in my head of things I have to do. I had to transfer business to an S corporation. I had to transfer investment properties into LLCs. I had to. There's a lot of stuff I had to do on a lot of different ends, And so we finally got a lot of that done. Like, I got the transfers done. I transferred business to S corporation. I did all that, and now the only thing left I have to do is I got a couple more things I got to do, to be honest. But I'm mostly done with it. I had to fill out a new deed and do all this different stuff, so. All right, let's do a poll here. Are you bullish or bearish on today's PPI report? Bull or bear? So yeah, so it's expected at 0.3%. 0.3%. Whoa, I'm realizing this is way too low. Let me move that up here. Yeah. PPI inflation's big. I'm excited. Let's get a timer up. All right, guys. So, yeah, PPI expected at 0.3%. Now, generally, PPI is a little bit less influential, but we do have PPI today. Next week, we got the Fed meeting. I'm curious to see if they changed the expectations for this meeting here. No, it's still at 97 to 3% likelihood when we look at the Fed Watch tool. 97 to 3% likelihood. Let me get AI. I got to ask AI some questions today. Anyway, let's talk about some news going live. And again, we got the timer coming here. Just bear with me. All right, so for today, as of today, markets exhibit mixed signals. Yesterday was flat after CPI data came in a little bit lower than expected. Again, kind of flat. Today, investors are waiting for PPI scheduled for release at 8:30 Eastern Standard Time. Yeah, so here is the timer to PPI inflation data right here. Again, investors are waiting for it to assess inflationary pressures within the supply chain. This follows a recent CPI indicating a 2.8% annual inflation rate, down from 3% in January, yet still above their 2% target. We also have jobless claims unemployment filings today. That's a big report also. So we got jobless claims unemployment filings as well as PPI inflation data. So in political developments, we got the government funding bill. Senate Democrats led by Schumer have expressed opposition to a Republican-drafted funding bill, citing significant budget cuts to essential services and programs. The standoff raises concerns about potential government shutdowns. There's also trade tensions because the president's recent tariff policies have intensified global trade tensions, of course. The European Union has announced counter tariffs on approximately $28 billion worth of U.S. goods, including products like bourbon, whiskey, boats, and motorcycles. These developments contribute to market volatility and uncertainty, and we've seen some negative pressure in markets over the last few weeks from these tariffs specifically. The Nasdaq experienced a rally yesterday driven by stocks like Tesla, Nvidia, and Palantir. However, analysts are still pretty cautious that the single-day gain may not signify a sustained upward trend. See, it's interesting when it parallels what I said yesterday. Like I said yesterday, it's not enough to rebound us back or sustain back from the negative drops that we've seen over the last few weeks, right? Seems like analysts are thinking the same thing, I guess. Treasury yields are mixed ahead of PPI. The 10-year has edged up to 4.33%. It's still down drastically over the last couple weeks, though, indicating a lower interest rate sentiment is what this means. In summary, U.S. markets are, navigating a really weird landscape shaped by upcoming economic data, political negotiations over government funding, and escalating global trade tensions. So y'all just be careful. You think you're smart until you have to spell simultaneously. I think I got it right, though. I just need an E there. Oh, I did get it right. Alright, guys. So, yeah. And you know what? I think we're going to start streaming both of these. I think we're going to start streaming. Our X page has been growing too, man. Like, we've been getting some good numbers, to be honest. So, shout out to you guys. We appreciate the love. Thanks so much. Thanks for the info and everything, what you do. Hey, thank you, man. We appreciate it. Bobblehead thumbnail. You know it's serious when the bobblehead thumbnail comes out. Did I forget to monetize the stream? Maybe I did. I don't know. Let me check. It's usually automatically monetized. Yeah, it's monetized. I'm not one that puts a bunch of ads on my videos, though. So, like, I almost never put ads on my videos. And so, if you join the stream and it doesn't have ads, it's usually in, like, as a YouTuber, I have two options. I have insert mid-rolls manually, which means that sometimes they'll give you an ad on clicking the stream. But any ad in the middle, I'm gonna have to manually put there, and I usually put 0 ads in the middle of the stream because, and my logic is that I'm covering economics. Data comes out, it's time sensitive. I don't want to be like, hey guys, CPI's coming out, and then boom, an ad. I would much rather just leave it like less ad full, and make a little bit of money, but not interrupt my economic releases for ads. But we got ads on it, but yeah. Oh, yeah, if you don't know who the fish is, you're the fish at the poker table. Yeah, it's a Rounders quote, but it's pretty true. It depends, though. Poker's very nuanced. Like, I love poker, and I played poker for a long time prior to trading. Poker is one of those games where you can play stupid a lot of the time, right? like I will pretend to be a very loose aggressive, what's called a lag player. I'll pretend to be a very loose aggressive player for a couple hands in the beginning, make it really noticeable, maybe give like a small amount of chips away in a really aggressive hand. And sometimes I'll win those hands, and then even better, right? But because I still look like a crazy person. And then I pivot to a much more tight but aggressive mentality where if I have a good hand, I'm going to start raising and I'm going to start bluffing and stuff like that. And that's usually how you trap people in poker is you pretend to be one way and then pivot to another way. And, you know, human nature tends to latch on to different stories and follow them that way. And it's just manipulatable. Yeah, maybe the market will settle. We'll see. Do you see prices going to daily high before ripping lower? Prices where? In stocks? In markets? I mean, I don't know. It's possible. The daily high is way up here in a lot of stuff, though. Like the daily high in the NASDAQ is a little ways up. If we look at the previous closing price, we're slightly red on the NASDAQ overnight. We basically broke down a lot, and then we've had a small bounce, but it's not a big bounce. Like, look, we've broken down on the Q and then bounced back a small amount. But if we put up a longer term chart, you'll see the red action that we've really sustained here is this. So this is like really, we're still in a pretty deep downward trend. This is the bounce back that we're experiencing now. So it's pretty light. It's not a huge bounce back or anything like that. You can see Apple's still pretty red on the day. Nvidia's back up to 116s, which is good, but we still got a ways to go. It's I wouldn't say we can celebrate yet. Apple's down. We can put up like gold here. Gold's kind of flat over the last 20 days or so. Still around lifetime highs. You put up like treasury yields. You can kind of see how they have moved. Here's treasury yields. They're down a lot, which again, these are basically interest rates, right? Treasury yields follow interest rates. This is a lower interest rate sentiment. And you can kind of see it's followed the market where like the market, interest rates, yields, they have kind of all moved in a similar trajectory here. And all of it has kind of bounced back over the last 2-3 days, you know, bounce back. All of it's bounced back in the last 2 or 3 days, but the question is whether this is good enough. We have a lot of stuff coming out over the next 2 weeks as well. Like we have the Fed meeting next week, which is probably the biggest catalyst that we get on a regular basis in markets, right? So next week we got the FOMC meeting, we got retail sales, we got a bunch of stuff coming out next week that might influence markets in a good or bad way. It's pretty probable that we are going to pause rates next Wednesday. I really doubt that we're going to cut, even though we've seen weaker economics and good inflation data. But it's very unlikely that we're going to cut. It's very probable that we're going to pause rates again. It's 97 to 3% likelihood that we're going to pause. So. Wait. Yeah, Top Step X is great. Oh, we have quad witching next week as well. We got the Fed meeting quad witch. You know, I bought this coffee, and we'll see if it tells the truth. You know, everything's a marketing like gimmick at this point in time. You know, I bought this coffee, and this coffee said, basically the argument was that coffee we drink regularly has mold in it, and that's why it kind of burns when you pee after drinking coffee, and it makes you kind of have to pee a lot, and it makes you crash a little bit more. And they said that that's because mold in the coffee. So I bought apparently like mold-free coffee here. It's called Danger Coffee. We'll see if it works. I don't really crash or have burning or anything like that, but I don't want to drink mold either, and maybe I fell for the marketing gimmick here. Cheers to marketing gimmicks. Again, I don't even know if I agree with that. I think a little bit of mold's fine. I grew up around mold. I'm not sensitive to mold at all. My wife, very allergic to everything. I grew up in a freaking zoo. My dad was a falconer, and so he raised falcons. He raised quail to feed the falcons, and then he raised falcons as well. We had dogs and cats and, you know, probably a lot of mold in that house. But at this point, because of that, I'm not allergic to anything that I know of. I'm not allergic to mold. I don't get seasonal allergies. Like, I'm fine. So you wonder which is better, really. Yeah, it might definitely be a gimmick. All right, guys. Yeah, the data's real time on Top Step. I mean, it's futures data, so it's a little bit different data, but yeah, you're going to get real time futures data. I'm pretty sure. At least check with them, but yeah. Remember, not an investment professional. I have no freaking idea what I'm talking about. I might be wildly wrong about everything I say. Do not copy me. Not an investment professional. Yeah. All this good stuff on screen right now. Understand it. Understand the stuff. Because, yeah. He was a falconer. So he raised falcons and would hunt. We would go hunting with the falcons. You know. The point I was trying to make, though, is that, like, I grew up around all that stuff, and now I'm not allergic to anything. And I don't think that's a coincidence either, you know. Top 3 strongest immune systems of all time is what I'm saying. You know what's very weird, though? This is something I've been telling my wife. I started training jiu-jitsu like a few years ago. I started training jiu-jitsu. Literally since I started training, I have not been sick. I have not been sick in years, in actual years. And I got 2 kids that go to school. I have not been sick in years since I started training jiu-jitsu. And you would think that training more, because it's a very physical sport. You're training with a lot of different people, you know, very physically training with a lot of different, like, dudes, to be honest. Like 15, 20, 30 different people a week maybe you're training with on a regular basis, physical. You would think that doing that would make you get sick more, not less. But I haven't really been sick in years now. It's strange, honestly. So I guess maybe the point I'm trying to make is jiu-jitsu helps your immune system in some way. I don't know, but Intel, what are you guys hunting? Usually we would hunt. I mean, anything the hawk will eat, to be honest. So we usually would train with like red-tail hawks, which are indigenous to Louisiana and Texas. Whatever they would eat, like we wouldn't eat them, right? Like the hawk would eat them as their meal, because the hawk's gonna eat regardless of whether we're there or not. But basically, what you do is you condition the bird to fly to your glove through whistling. And so you put a piece of raw chicken on your glove. It's a leather glove, and you put the bird on a perch, and you whistle. You go something like, or something like that, or something, right? And the hawk, it will eventually, if you do it enough times, the hawk will eventually correlate whistling with flying to your glove. And so once you do that enough, you can then go out into the woods. The hawk can fly up into the trees, and you would basically go around and like beat the brush and like try to scare rodents. Like the hawk would eat anything. It would eat mice, snakes, rabbits, squirrels. The big one that you want for them is like a rabbit or a squirrel. But yeah, you just whistle. Hawk would fly back, you know, catch its meal, eat, you know. All right, guys, NVIDIA pulling right back to that previous closing price, 200 exponential volume weighted average price level. Let's see if it holds. Yeah, well, there's definitely some stinky dudes at jiu-jitsu, you know, and you know who they are. Like some of them, you're just kind of like, oh, bro, like come on, like wash your gi, dude. Like wash your rash guard, dude. You know. I'm probably a little bit the other way. Like, I'm a little OCD. I shower probably 3 times a day when I train. Does PPI usually come in the same as CPI in terms of results versus expected? No, not really. PPI is kind of a different animal. It's more so manufacturing prices. So we're looking at like manufacturing prices, producer prices, and in that regard, it's a different animal. Sometimes PPI, and the way the market reacts to PPI can be kind of a different animal as well. Sometimes PPI can come in higher than expected, the market goes up. Lower than expected, the market goes down. There's not always a correlation between CPI and PPI, as well as there's a little bit more variance in terms of the reaction and the interpretation of the data. And so, yeah, we'll have to wait and see. It can influence markets. It does move markets in a big way sometimes. But the direction in which it moves markets is a little bit more ambiguous. So. Three times a day. Well, yeah, you got to think about it if you're training. Sometimes I'll train twice a day. It just depends. But like, okay, if I'm going train, usually I shower beforehand because, you know, yeah, I usually shower before and then go train and then shower again. And my wife's really sensitive to allergies. And we have 2 dogs that she's not really super allergic to them, but she's a little allergic. So basically she doesn't want their hair in our bed. And so sometimes I'll have to shower again to like make sure I don't have dog hair on me because I play with the dogs a lot, you know. Anyways, energy sector is moving. Is it really? Is oil moving? Let me see. So we're at 67.50s. As CPI is looking to falling sharply and trueflation, PPI should be declining as well, as they do have some sort of correlation to one another. Well, I mean, there's a little bit of one, but it's not always like an exact correlation, though. Like, we can look at trueflation and see what we're looking like for producer prices. Indexes. Trueflation US. Producer price index. Yeah, I mean, there's not really, like, there might be some correlation, but it's not always like a exact, like, just because CPI comes in low doesn't mean PPI is going to come in low and vice versa. I would say if PPI does come in low alongside CPI, we're going to get a smaller reaction to it versus if PPI comes in higher than expected. You got to understand the reason it's not always high versus low is this, okay, is because we're looking at what the data is versus the expected number. Okay, so we can look at what it was last time, and then maybe there's going to be a correlation between like CPI coming in lower than what it was last time, and PPI also might be coming in lower than what it was last time. But the main number that we're looking at is not versus previously. Instead, it's versus the expected number by analysts. And so because of that, it's very common we get CPI coming in higher than expected and then PPI showing up lower than expected, or CPI showing up lower and PPI showing up higher. It's not always a parallel outcome versus expected numbers, if that makes sense. But sometimes there is, you know, I guess what I'm trying to tell people is there's variance, and just because CPI showed up lower than expected, don't like take some huge big bold position and then get mad when PPI is higher and the market goes down or something, because it's not always that easy. But I don't know. Do what you want to do. Yeah, I mean, I think my wife and I both have some OCD for sure. It's in different ways. My OCD is more so timing based. So like, I want to be on time for things. Yeah, I have OCD in a couple different, like a lot of different ways, but. I have OCD for like hygiene, timing. Yeah, there's a couple ways. I don't really feel like getting too deep into my OCD tendencies, but I certainly have. My wife definitely has it too. But I'm also ADHD, and so like it's hard to tell which one's which. And I know everybody says they have ADHD now, but. Every time I buy a stock, it goes down. What's the actual reason? I don't know, brother. I don't know, man. Well, right now, if you're buying stocks, Martin, most stocks are going down. And so if you bought stocks over the last couple weeks, it's not because you're buying them, they're going down. The whole market's going down right now, bro. You know, and this goes to show, like, what happens a lot of the time, right? And I know people that that I know specifically that have this same, that get tricked into this. Okay, so what happens is this, guys. The last 2 years, huge bull market, right? Crazy good bull market. Like literally every stock that you dip by over the last 2 years, for the most part, this is a little bit of an embellishment, but the point is, almost everything you buy up over the last 2 years is going to rebound if you buy a dip, right? Every dip you could buy over the past few years, most stuff's about to bounce back. And so what's happened over the last few years, and again, I see this reflected in some family members that come to me and come to my wife and come to people, and they think that they're now these like talented investors, that they're like the greatest ever, that they have some type of foresight into markets that nobody else has, and all this different stuff, because they are so confident because they've made money buying dips over the past few years. The problem is that the check's been coming over the last couple weeks, that every dip that you buy is not just going to mindlessly bounce back, and it's built a lot of false confidence in a lot of different people that I know, because they're up some because they bought the dip in a couple things over the last few years, but that's because we've been in this crazy bull market that's been really easy to make money, and the market's not always like that. And if you take that same mentality and you implement it during a bear market, you're going to lose boatloads of money if you do that. And so if you've made money over the past few years, while I know a lot of people might be like, yeah, I'm the greatest ever, I'm definitely the top 3 of all time in the world, worst ever. But I know a lot of people have bought dips in the last few years and they're making money and they're thinking they're great. Just understand, it's easy to make money in a bull market. Protect yourself. It's hard to keep that money in a bear market. And so protect yourself. If you're buying long term, it doesn't matter anyway. And when I say long term, I mean for decades. It doesn't matter anyway. Not an investment professional. Just be careful when we get bear markets, because a lot of people have all this false confidence over the last few years. It's been really easy to make money. Every dip that you buy is basically going up. So be smart. Your OCD is blocking people. I don't think it's OCD. I think that you got, okay, like, and again, I'm only responding to a comment here. So if somebody's like, this dude only talks about haters, I'm just responding to a comment, okay? And again, it's a hard dynamic being out here on YouTube. But I block people, just to clarify, if they're haters, right? And if somebody's sitting around waiting to criticize, like if I can feel resentment from somebody in the chat, you're about to get blocked, right? Like there's no reason for you to be here. Like go watch somebody else. What's strange is that you get people that get blocked, they keep coming back. So you know the content's good, I guess. But like they keep coming back. It's like, dude, if you don't like me, if you're, why are you here? Go watch somebody else, bro. But the internet's a strange place and people are weird. And so, I don't know if blocking people is my OCD, but I definitely am thorough with it. It's a gauntlet here. If you can survive more than a year, cheers to you. But the truly supportive people do, and like they know. See, but like this is what's strange. So the gift is a guy posted the same thing, which is definitely the same person. I do the opposite of you and make money. It's like, dude, then why? Like, it's strange. And I guess like let it out, man. Like it's okay, if you're that like struggling where you feel the need to like harass people online, live your life, brother. Like I guess if it makes you feel better, do it. And you might lie to yourself and tell you that's not why you're doing it, and that's okay, man. Like just live your life, I guess, brother. It's all good. I mean, you're gonna be banned for life here, but yeah, have a great day. Those people bought at the top, they get worse in a bear market. Yeah, no, bear markets are going to destroy a lot of people who have made money over the bull market. And that's what I'm trying to tell you guys, is that what the really profitable traders do, and I'm not even claiming to be one of them, but what the really profitable traders do, they protect their money is what they do. What big money does better than anybody is they protect their money. And that's a hard thing for people to do. I think when you start to get confidence buying these dips and buying these pullbacks, it becomes really tempting to just keep on buying. But at a certain point, when you recognize some negative confirmation, you got to just be careful. Hey, thank you, Santiago. My guy, thank you, brother. PPI isn't going to show the new tariffs, are they? I don't know yet. I mean, I hedge a lot of different trades. Protect your money, good lesson. Yeah, it's just important to, like, again, there's a very famous quote. I don't know if it was Charlie Munger or if it was Rockefeller, but the quote goes something like, money is not made in waiting. Or no, money is not made in trading. Money is made in waiting. And so your job is to be able to wait to make money. You know, if you buy every dip you see, you're setting yourself up to fail. Gold is actually pushing up some here, chat. So gold is pushing up some. We're at 29.60s right now for gold. What's the lifetime high is 29.70. So we're still pretty close to all-time highs in gold. We got to break 29.74. I'm not sure if we went over this at one point during pre-market, but we're getting up there. How would you go about hedging? Hedging is diversifying. I mean, not really. Hedging is, I understand why people hedge, but it depends on what kind of hedging you're talking about. Okay, you could be talking about diversifying, or you could be talking about like the more true definition, which is probably something like buying, you know, two different opposite securities in order to balance of some way, you know, like buying two different opposing securities, two different opposing sectors that oppose each other to balance your portfolio or something like that. But thanks for answering the questions, man. Came across you yesterday, learned a lot from you. Hey, I appreciate it, brother. Thank you. Just got here and you're already speaking facts. Good morning. Hey, what's up, Gabe? Thanks, man. It depends on what kind of hedging you're talking about, right? You could be talking about buying a long contract and a short contract, and then you could be talking about buying a straddle, which is more like conventional hedging, or you could just be talking about diversifying. You know. So it depends on which one you're talking about. All right, guys, so gold's still popping up. And again, we'll see what happens. Nvidia's slightly red on the day, and Nvidia was mostly flat yesterday. We went up in pre-market, but since the market opened, we're mostly flat. And we've been flat since then. I wonder if the market's waiting on... I wonder if the market's waiting for PPI data or what. Again, Nasdaq's down. We're gonna day trade some today too. Second that statement. Learning lots from you, especially about yields. I thank you, bro. I try over here, man. I try. Time in the market beats timing the market. Yeah, for sure. Managed to 2x on my holdings in crypto using hedging, if that's what it's called. What kind of hedging are y'all talking about, though? I generally use 1x leverage on the shorts just so I'm protected against liquidations. Yeah, I feel you. Yeah, I mean, hedging can be a lot of different ways. You could buy like is it, I always get this wrong. Is it strangle or straddle? Yeah. So it's called a strangle. options contract, which is buying a put and a call at different strike prices with the same expiration. That's a hedging strategy, and basically you're letting volatility pay you. So you take both a call and put, and then whichever one runs more, you cut the first one and then let the second one run, profit the difference. I'm not really a big user of that specifically, but you know. Yeah, or buying a call option. Yeah, that's probably the most common used Allmac is if I buy, like if I buy the SPY, and then I buy a put option on the SPY, you know, and whichever one runs more, you know, a hedge against it that way and let the difference profit. I learn something every day from you. Hey, thank you, man. We appreciate it. What do you think about a millionaire that sell emotion for people to buy crypto? I'm not sure what you mean, Kevin. There's a lot of scammers, though. I'd be very careful. If you have somebody reaching out to you that says that they're an account manager or a crypto professional, like, you know how easy it is to fabricate wealth and that type of stuff, man? You know, it's got to be really easy to, like, fabricate wealth. And there's a lot of people that just want you to send them money. And so they'll be like, yeah, I'll earn you 30% in a week, guys. If you're, usually it's more than that. They'll be like, yeah, I'll earn you 300% in a week if you send me your crypto. And then you'll send them the crypto and you'll never see it again. If you're dumb enough to send them extensive amounts of crypto, you'll never see it again. You'll lose 10, 20, 30 grand if you do that. So just don't do it. Yeah, most of them are nonsense. You don't need a crypto professional. And most of them are fugazi, unicorn dust. They don't exist. Yeah, most prop firms aren't going to allow hedging. That makes sense, though. They don't want... They're trying to truly test your skill, and so they don't want you to take two different directions on two different accounts is what it is. Like, if I got to make $1,500, they don't want me buying... Like, they don't want me going long on one account and going short on the other account and, like, profiting that way. Basically, I can, you know, if I did it that way, I could make like $100 per. I could get funded for $100 each, and it's just not something they allow. Understandable. I think understandable. What I do is when market is making all-time highs, I slowly start buying bonds to protect my gains, and then on big dips, I start buying back stock. Yeah, that makes sense. All right, guys, we got about 700 people here already. We got 40 minutes left, so we still got time. Yeah. All right, looking at our poll here, we asked people, are you bullish or bearish on PPI inflation? 65% are bullish out of 500 votes already in only about 38 minutes, 38 minutes. 35% are bearish. Interesting. What do you think based on yesterday's release? It'll go positive or negative? I'm not sure. Looking at the expected numbers for CPI inflation, if we take a look at this. So if we take a look at this, we got jobless claims coming out as well. I'm wondering if I should title the stream this. Yeah, so PPI is expected today at 0.3%. Year over year, it's expected at 3.3%. Now, 0.3% is a decrease from last time at 0.4%. Now, CPI came in at 0.3% as well. And so I tend to think this is going to be as expected today. I might be wrong, but I tend to think it's going to be as expected. 226 is what's expected for jobless claims. So jobless claims is expected at 226K. Jobless claims. There it is. Alright, so yeah, I'm trying to put this on screen so people can see it. There we go. In big letters here. Yeah, so 0.3% is what's expected. Honestly, it's been 0.3% expected for a minute, though. It really has. Alright, guys. I don't know which coins go up when Bitcoin goes up. I'm self-employed and I invest for my pension. I have 3 portfolios, low, medium, and high risk. My high risk is crypto. My low is a collection of large funds. All bring yield, making around 33.2% a year. I mean, Aiden. Just a genuine question. What do you have that's pulling in 33% a year? I mean, over the last 2 years, that's feasible, to be honest. But just understand, you might not be making 33% a year like after the crazy bull market is done. Generally, you'll average about 2% or 10% a year. But if whatever you got making you 33% a year, I wouldn't bet on it continuing. Depends on what it is, though, I guess. I've heard that one influencer suggest all in one marketplace and make like 20%. Is that 20,000% profit? What do you think? I don't know, man. I'm not sure. I wouldn't listen to any of that stuff. Again, they'll lie to you. They just want you to send you their money. Or they just want you to send them money is what they want most of the time. So just don't send anybody money unless they're a genuine registered professional that has proof and you know for sure. And they'll have a lot of tricky like scams. So just be careful, man. Yeah. Everybody's a genius in a bull market for sure, you know. Technical, look it up online, brother. I don't know. It's at 8:30 Eastern time here in the US. What do you think a massive cut on cap gains tax would do to the market? I think it would help for sure. I'm for it, you know. All right, guys. Hey, we got PPI inflation data. Let's see what we get. I'll put. We'll trade a little bit today too. Market's flushing down a little bit. We're right at the 200 exponential. I wonder if we reject this level here or what. So I'll put some of these trades up. Let me mark this closer. Yeah, market's starting to flush. Here, sorry, I made this one trade on a combine account, but it's one trade on a combine account, so I'm trying to like manage it. We're down a little bit on this. If we make 1500 today, we get funded on this one now, so I'm trying to just like make this last little bit on this account. I don't want to get stuck in this though. Yeah, so we cut most of that here. Very small loss though. Question is, do we want to add to this now on the pop? I guess we'll try. Alright, this is all we're going to do. See if we get a retracement back down. There we go. There we go. Alright, so we got that nice little retracement back down too. We're kind of flat on this now, but I don't know whether I want to add more to this here. I guess I could try. And we'll leave it here. Break down. See, we're right under that 200 exponential though. All right, there we go. Finally. All right, we locked in most of it. I'm gonna short a little bit more, see if we get that firm breakdown. Oh, wow. Woo! Lucky there. Something happened economics-wise. Some type of news catalyst happened. Let me see if I can figure out what it is. What a drop. We were on the right side of it too. You love to see it. Now very green on the day. I don't know what this is though, but man. Wow. Yeah, I don't know what kind of drop that was. What is this? Something happened. Anybody have any news about what could have happened just now? Something happened. I'm just glad I was in the right direction. Like, we were short and we got a huge breakdown, and so we ended up making a bunch. Now we're green on the day, but man. I'm going to short into this, although it's very risky here. We'll add to it if we get green. We just scaled out of that too. I don't know if I want to add some more to it. I guess I do. But we're just trying to piggyback off of this direction that we just faced. We got 8 contracts here. Very strange price action. We took a little bit off there just to protect it. See if we retrace back down. Okay. Nice. So I'm kind of like grinding up some money here, but I like the downward direction. There we go. Bad fill. All right. I mean, we're up really nicely today already. Okay, so the president posted is what this was. So this was a post. President posts EU has put a 50% tariff on whiskey and, quote, if this tariff is not removed immediately, the U.S. will shortly place a 200% tariff on all wine, champagnes, alcohol products coming out of France and other EU represented countries, end quote. This is what dropped the market. It's a president quote. He basically threatened a 200% tariff on alcohol products coming out of France and other European represented countries. Yeah, guys, y'all be careful. I mean, it was in my favor this time on the short side, but y'all be careful. All right, there's gold. Gold pushing up. Nvidia very flat on the day. Nvidia right at that previous closing price. I guess I'm bearish here just because it's bad news, but and again, in the landscape of all this stuff, the PPI inflation report is incredibly important. He wants the market down. Yeah, I'm sure the VIX is rising over the last couple minutes here. Let's take a look at the VIX. Yeah, VIX is starting to pop up. Look, yeah, and so the short thesis was correct. I mean, not a shock. And this is a very common thing. I piggyback off of big movements like this. Look at the big drops. We'll put our funded account up, see if we get into some stuff on the funded account. We lost a little bit yesterday on one, maybe the other one too. But we're still green on both of these accounts. Market's still falling here. Wow. Market's still falling down. All right, now market's coming back up here. It's so volatile right now, though, guys. Y'all just be careful. Do I hear birds, or is that outside my house? All right, so market hit the bottom of the range. So market popped up a little bit here. Market looks weak. I'll put up my combine account, which we are trading a little bit on right now, but we're actually down on this last trade here. I gotta be careful. I don't know whether I want to add to this or not. I'm gonna liquidate this actually. So we ended up getting out, but we're still very green up on the day. I've been trying to short this with regular NASDAQ contracts. I'm gonna try to buy this, kind of a risky buy, but we've got a cushion. We'll trade off of that cushion and then we'll switch back to micros if we don't make it. I just want to see a quick retracement back up that I can take profit into. There we go. We're at the bottom of the range. Is the only reason I'm buying it. We do have inflation data dropping in 20 minutes. And so I just want to see if we can pop back up some here and range and chop leading into the inflation report is kind of what I'm betting on here. It's a combine account, so if I get 1,500 today, I'm funded on this one. This isn't our actual funded account anymore. Yeah, I got to start liquidating. See, there he goes. It retraced right back up as soon as I say that. And it's right back down. Still looking brutal. I still want to try to catch this range though, and I know it's a risky endeavor. So I'm going to try to go size in. And if I fail this, I'm down 50 bucks, guys, just to clarify. Very risky. I want to see if we get a liquidity grab though. I want to see if we get a liquidity grab up there. We're flat on the day right now. I'm going to liquidate some of my position here just to protect it. I don't want to lose too much. I want to give myself a chance. I just want to see a liquidity grab, but we kind of just dumped down here into it. Yeah, we're going to go ahead and cut it the rest. So we're not actually down that much on this one. We got time. I'll switch to my funded account, but we'll see if we can do better. All right, guys, we got 20 minutes left. The VIX is popping up too on this weakness. Wow. Market's still dumping here. Let me check the chat up. I gotta switch. There we go. Micros are different than bonds. Bond prices are basically loaning the U.S. government money, with the exception of, with the expectation of earning a yield from it, right? Like earning interest from loaning the U.S. government money is what a bond is. Micros are futures contracts that, like, you have the regular E-mini futures contract, and then you have the micro futures contract. So like the micros are like small size future contracts. Is what it is. So they're both completely different things. They're both in finance and they're securities, but both of them are different types of securities. All right, guys, we got 20 minutes left. 20 minutes. Nice. All right, so we got ourselves back to basically flat on that account. Yeah, futures are good. If you want to check out Top Step is where I trade futures on. It's a funded account program, so it's a little bit less risk than like funding your own account thousands of dollars and probably losing it, at least for most people. And most day traders lose, and so if you try to fund your own account, you're probably going to lose. Everybody says they're going to be some guru savant, but most day traders lose money. But on Top Step, they give you a 50K demo for the base one. If you can make 3K without losing 2K following their rules, they fund you 50K with a 90% split, and you get to keep your first 10K in profit. And if you fail, you only lose the $49 you pay for it. So it really creates this beautiful situation for traders where it's the best of both worlds. If you lose, you're out $50. If you pass it, you get a 50K funded account with a 90% split, and that's very similar to funding your own account, but the risk is noticeably less. And in the futures market, you can day trade the S&P, the NASDAQ, basically the SPY and Q price action, gold, the Dow, some currencies. A lot of Forex traders should be trading futures, and Top Step is the most legit funded program in the world. Just a great way to learn how to day trade. And so again, I'll put this link up. If you want to help support the channel, support your boy here, I'll put this link up. Great way to help support us. But understand all these rules. They are an affiliate of mine. I am biased because I get paid by them. But it's genuinely useful. Yeah, you can trade news on Top Step, I think. I'm pretty sure. I would check with them to be safe, but I'm pretty sure you could trade news. If you want to check it out, here's the link. I'll put the link up in chat. Remember, they're an affiliate of mine. I'm biased. You want to confirm it all with them. Can't guarantee anything, but very useful for learning how to trade because it creates like this middle ground of pressure. It creates this middle ground of pressure where like you're learning how to trade, you're risking something, but you're not risking like 5, 10, 20, 30 grand like you would be if you funded your own account. You know, so it's just powerful. All right, market's kind of chopping out here. We got 16 minutes left. So I'm basically flat on the day on my on the account that I've been trading. So we got ourselves back to flat. I'll show you guys the trades. Like we're down $40, but it's close enough to flat. So these are the trades that got me back. We did get the buy that we wanted in here, and I might buy this. And again, we got PPI inflation data going live very soon, guys. I'm gonna buy this dip. It's too big. I think we're gonna retrace. 3 contracts. We'll add a little bit deeper into this. I gotta be very careful now. I'm giving it time. I wanted to retrace some, but it's also a risky spot. The reason I want a retracement is because we got 15 minutes left until PPI data comes out. So if we pop back up, I'm going to take a little bit off up here just so I can add back if I want to. Yeah, there's the pop back up. Yeah, I cut half of that too. I'm going to add to this level here. It's a really risky level to add to, but we're going to take a swing and try it. There we go. Nah, it's too quick. We're going back and forth today where we're green and we're red. Let's give this a second. Catching a falling knife. I only really do this in my actual challenge account, so I'm not really gonna do this in my funded account. This is something that like it's higher, like you get a bigger reward for your risk, but lower accuracy generally doing it. But if I have to make like a big amount on the day to get funded, this is what I'll do. But it definitely has its own risks. Point is though, you don't want to see me trade like this, even if I make money, and emulate it with a live account or a funded account. It's probably not a smart move. All right, there we go. All right, there's a nice little rebound back up. We'll take some more off here. We got the bounce back that we wanted. There we go. Just a little late, a little delayed, but that's all right. There we go. Nice. All right, so we're back to close to flat on the day, close, but we're still a little red. Of course I don't only paper trade, Kevin. Come on now, man. You watched the stream long enough to know it. There are only 3 people I listen to. Peter Schiff, Arthur Hayes, and now you in the morning while walking my dog. Hey, thank you, man. I appreciate it. Yeah, there's the reversal I wanted. A little bit late, though. Again, I'm not very good at trading in pre-market. I'm really not. So, like, I got to get better at trading in pre-market because, you know. Here, we'll put our actual funded account up. Yeah, we got PPI inflation data going live pretty soon. So we did get ourselves back green here. Inflation coming down. Yeah, yesterday inflation data came in noticeably lower than the 3% expected. They expected 2.9 to 3%. Yesterday we showed up at 2.8%. And we did get ourselves back to green here on this one, just to show you. So you can see the green box at the top. Yeah, I don't do I'm not great at pre-market trading, to be honest. Like, I try, but we're just not that great at it. What do you think about the construction industry? Should I get in by doing a major in it? Any futures? I'm not sure. It depends on, there's a lot of variety there, which there's good construction industries, bad construction industries, good construction stocks, bad construction stocks. One of my favorite stocks has always been Home Depot, because I think Home Depot is going to be more, and I'm not telling you to buy it, okay? I'm going to preface this. I'm certainly not telling you to buy it. But Home Depot has this really interesting dynamic about it, which makes it resilient to online mail order obsolescence, I guess is the best way to put it. Like, Home Depot's not about to go obsolete to websites like Amazon. Not in the same way, because, like, if you need lumber, you're going to go buy lumber. If you need plants, you're going to go buy plants. None of the stuff can you really buy conveniently on the internet. And so I think Home Depot, more than almost any other retail store, is somewhat protected from obsolescence from mail order shipping that we get online now. And so the point is, people got to go to Home Depot. They're not going to buy that stuff online, at least most of it. They want to go try it out. They want to make sure it fits. They want to go buy wood. They want to go buy plants, and they're going to buy that stuff at Home Depot. They're not going to buy it online most of the time. And that's going to be set for a long time. So Home Depot is one of my favorite stocks in that regard. And I've been saying this for years, too. I haven't really talked about it in a while. And Home Depot is kind of red on the year. A little bit, you know. So... PPI relates to the price companies get from wholesalers. Yeah, so this is like manufacturing. Do you think we get down to 2% inflation rate this year? No, probably not. How are yields looking? Yields are... Again, we got yields coming out. Or we got PPI inflation coming out. Yields are up. Yields just opened higher. So yields are at 4.3%. So they're up a little bit, indicating a higher interest rate sentiment. Maybe inflation fear is still in everybody's minds. Hawkish or dovish? I really don't know. It depends on what inflation shows up as. Yeah, we got 9 minutes left, chat. Don't do it. Don't copy me. I'm not an investment professional. I have no freaking idea what I'm talking about. I might be wildly wrong about anything and everything I say. Don't copy me. Home Depot might crash tomorrow, guys. Don't do it. Don't copy me. I have no freaking idea what I'm talking about. We got enough disclaimers on the stream anyway, but still. If CPI is low, PPI is higher. Not always. It's not always that easy. There's variance, guys, with this. You know, I heard somebody say earlier that like CPI is low, PPI has to be low, and then again, that's just not true. There's a lot of variance in how it shows up. Again, looking at the Fed watch tool, it's still pretty probable that we're going to pause rates. That hasn't really changed. We can look at bond yields down here and see they're opening higher interest rate sentiment. We can see Nvidia in the middle. We can see gold. We're bouncing right at this level that we drew on our charts. I don't know if everybody's bullish. I mean, some people might be bullish, but... All right, guys, 8 minutes. Gold's starting to break down a little bit. Bond yields are opening up higher, again, indicating a higher interest rate sentiment. And again, let's do our economic lesson for the day. We do this once a day. All right, guys, so for those that have not been watching my stream for very long, let's do a quick little economic breakdown. The Federal Reserve is kind of like the bank that polices other banks, creates policies, supports other banks is a better word for it. And you got all these heads of these different regional banks. They make up the Fed members. And then Jerome Powell's Big Papa Fed member. He's the head of the Federal Reserve, the chairman of the Federal Reserve. Now, what the Fed members do, and the FOMC committee does, what they do is they influence interest rates as well as influence economic policy to balance the economy. And I say balance because like people have this misconception that lower interest rates are always better. They're not. They can cause problems as well. Anything in abundance, too much abundance is bad. And so lower interest rates and too much economic stimulus is bad because it can cause inflation. And so the Federal Reserve's job is to balance the economy. If it's too hot and the labor market's too strong, we get inflation. If it's too weak and nobody's working and GDP's coming in negative, we could enter recessions and depressions. And so their job is to have a balancing of those two things. And they control interest rates, and one of their tools that they use to balance it. If it's 2020 and lockdowns are happening and the economy's looking really weak, the Federal Reserve stepped in and they brought interest rates down to almost zero. They did a bunch of rate cuts. They brought interest rates down to almost zero. They did a bunch of economic stimulus as well. They sent out stimulus checks. They printed a bunch of money through quantitative easing, which is creating bank reserves online, form of money printing, and using those bank reserves to inject liquidity into the bonds markets. They do all this stuff to try to save us from a weak economy, right? And it kind of did. We had supply chain problems, but market bounced back. The labor market bounced back much faster than a lot of people thought during that time because of all the economic stimulus from all those rate cuts that we got, lowering interest rates. And the logic is that when rates are low, people have cheaper access to loans and money, and so they tend to spend more, and that stimulates the economy, of course. But the problem is that after all that economic stimulus, especially like supply chain problems, stimulus checks, all that stuff caused problems. And it caused problems, and inflation spiked to almost 10% in the few years that followed 2020. And so then the Fed has to, and again, a Fed that wants to stimulate the economy through low interest rates is a dovish Fed, a loose economic policy. When inflation starts to get sticky and sketchy, they tend to pivot to be more hawkish, which is restrictive. They want to push the economy down a little bit through higher interest rates so that inflation goes down. And so that's what they do. They do a bunch of rate hikes. They raise the federal funds rate, pushing the economy down, because when people have higher interest rates, they tend to spend less. They have less cheap access to money. They tend to spend less. They can also do the opposite of QE, called quantitative tightening, which is a form of restriction in the bond market, where they take liquidity away from the bond market. They reduce their balance sheet through letting their current holdings in the bond markets run off their balance sheet and mature and expire, basically. So that's where we're at now. The Fed has paused rates for a year straight. Back in September of last year, they finally started cutting rates after raising rates for a long time to try to combat that inflation. And we have seen inflation slow over the last 6 months to a year. A little bit longer. The last few years, inflation has slowed down. Now the Fed has this big quandary where they're wondering what they should do, whether they should cut rates, because if we hold rates too high for too long, we can enter a recession, because we're keeping interest rates too high. We're pushing the economy down too much. But we've been pausing. Again, the last meeting we paused, and this meeting we're expected to pause next Wednesday. With all that in mind, inflation data is incredibly relevant right now. The context of inflation is incredibly important right now because of all this nuance of Fed, fears and inflation fears. If inflation is too high, the Fed's not going to be able to cut rates like everybody wants them to bring interest rates down. And I think right now the market really kind of wants lower interest rates. They don't want high interest rates any longer. Interest rates have been 6, 7, 8% for a long time now, and they're ready to bring those interest rates back down. And really, we're talking about the federal funds rate, but eventually it trickles into everything else. Right now, the federal funds rate is not actually 5. Mortgages are 5, 6, 7% right now, but the federal funds rate is about 4.25% to 4.5%. With all that said, though, we got PPI inflation data dropping in 3 minutes. Chat, 3 minutes. Let's see what we get. And all of this with the landscape of tariffs, tariff drops, big market corrections, and the Fed meeting looming next week. It's a big week. It's a big week, guys. Oh, we also have jobless claims unemployment getting released right now, showing what unemployment numbers might be. Jobless claims expected at 225,000. We got less than 3 minutes, chat. Less than 3 minutes. Be ready. We got jobless claims. We got PPI inflation data going live. We'll see what the market does. We're ready. We got gold up on the top right. We got NVIDIA in the middle. We got bond yields. And in fact, I'm going to put maybe like the SPY here in the middle. And then we got bond yields, 10-year treasury yield on the bottom right. 225 expected for jobless claims. PPI expected at 0.3%. The month-over-month PPI reading is the most important. It's expected at 0.3%. Chat, 0.3%. Let's see what we get. Y'all ready? All right, guys, we got 2,500 here. We got a minute and a half left. Chat, a minute and a half left. Whew. Be ready, guys. Be ready. Less than 2 minutes. This timer's a little bit early, but that's okay. We got about a minute and a half left. Yeah, hit the live button next to the play button. Make sure you're fully caught up on stream. I don't want to hear it 2 minutes later that you're delayed, that I'm late or something like that. Hit the live button next to the play button. We got 1 minute left. A little bit over 1 minute left. Yeah, I'm a little nervous, to be honest, to see what this data does. All right, guys, here we go. We got about 3,000 watchers right now. We got less than a minute. Will we go up or down on this report? Let me know. Up, down. Put it in chat right now. Up or down. We got 45 seconds. 45 seconds. The market has stabilized on the bottom here. We'll see if it holds. Be ready. Jobless claims is definitely not going to be 300K, I think. That's way high. But maybe I'm wrong. Who freaking knows? Up, down, up, down. Yeah, it's almost 8:30 though. Chuck, we get a big spike in viewers at around 8:30. All right, this timer's a little bit early. We still got 20 seconds. 15 seconds, really. We'll do a 10-second countdown as we get there. All right, guys, let's do this. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, and now. All right, guys, building permits for Canada went up. We're waiting for PPI inflation. Look at the market spike. Jobless claims lower than expected. PPI showed up at 0%. 0% PPI versus 0.3% expected. 0%. 220,000 jobless claims versus 225 expected. 0%. No increase month to month in PPI inflation and producer price inflation. This is definitely an optimistic thing. No increase in prices. This opens the door to more rate cuts, potentially. 0% PPI inflation month to month. Again, 0% versus 0.3% expected. 0%. Guys, this is good. Obviously, this is good. Again, 0% versus 0.3%. And then jobless claims showed up lower than expected, showing less people filing for unemployment. It showed up at 220 versus 226. Again, jobless claims 220K versus 225K expected. Markets bounced a little bit, but it hasn't really reacted to, like too much here. But again, we'll put this data up on screen. PPI month over month, 0%. There's the data on screen. Man, do we buy this dip? I think we kind of have to, a little bit here at least. 0% inflation data is good. We're going to start sizing in here. It's also a risky thing, but I think it's logical. Sometimes the first move is the wrong move, though, so I wouldn't copy me here. Do not copy me, not an investment professional. I have no freaking idea what I'm talking about, guys. All right, we got 20 contracts here. It came in at 0%, though. I'm going to give it time. Even if we, like, I have time, I'm going to give it time. There we go. There we go. There we go. You love to see it, guys. Hey, I'm going to add to this now, too. 11 contracts. Take more off there, too. Wow. All right, we're out. Woo! So we made $300-400 there. A lot of volatility, but we'll take it. I'll buy this up, too. I wanted to buy it up. I was a little late, but that's all right. Trading micros. 0% inflation is pretty optimistic look here, but y'all be careful. A lot of variance that comes with this. I'm going to keep buying up here. We got a big cushion on the day. 25 contracts. There we go. There we go. Wow. Look at these gains. Up about 7 on the day now. We got 5 contracts left. We can play around with this now. I don't know what I want to do. I can hold the rest break even probably here and just let the rest ride. Add a little bit more to it now too. There we go. And get out the rest up here. Nice. Up $820 on the day. You love to see it. I mean, very easy dip buy here. 0% inflation's optimistic. So we make like a big pullback after this report drops. I'm buying that all day. 0%. I'll take it. So here's the trades. Very easy trades, to be honest. I'm not telling you what to do, but this is a very easy correlation here. And sometimes the market's nonsensical. That's absolutely true. But I think 0% is too good for the market to react negatively. I mean, it's never too good. There's always variance. Anything could freaking happen. But yeah. Also, guys, if you haven't already, check out Top Step. I'm day trading a Top Step combine right now. So they give you a 50K demo. If you can make $3,000 in profit on that 50K demo while following their rules, you can't lose $2,000. So it's a reasonable 3-to-2 ratio. They fund you 50K, 90% split. You got to confirm it all with them. I can't guarantee anything. You want to check out their rules and all that stuff. But if you do that, you get a 50K funded account. You get to keep your first 10K in profit after that and 90% following it. That's very similar to funding your own account. But if you fail, you're out $50, and then you get a practice account with real-time data that you can use if you fail it anyway. The value's there. No PDT run futures. You can day trade the S&P, the Dow, the NASDAQ, the Russell, gold, some currencies. Most day traders lose, and so everybody thinks they're going to be some guru savant. Instead, most day traders are just about to lose money. Frankly, it's a lot cheaper to lose here than it is to put up money yourself and probably lose thousands of dollars most of the time. But I'm biased because I get paid by them. They're an affiliate of mine, so I'm biased, of course. But if you want to check it out, they've paid out almost $200 million since 2020. They fund thousands of traders. What it really is, it's like a souped-up demo account that teaches you how to trade, especially for new traders. And I think that's incredibly valuable. Incredibly valuable. If you want to check it out, I'll put the link up in chat. There's the link right there. Remember, they're an affiliate of mine. I am biased. Understand CFTC 4.41. Hypothetical or simulated performance have limitations, guys. I'm not an investment professional. I'm not liable if you lose money. I have no freaking idea what I'm talking about. Don't copy me. Definitely top 3-ish. All right, so we switched to our funded account here. We'll see what we can get now. Yeah, we're starting to turn a little bit here, though, so it's interesting. Do you buy this dip up now? I'm not. I've already made enough. I think I'll probably wait until the opening bell to get my last little amount here. But I'm not buying this up yet. I still think it'll probably go up, but I'm not trusting it enough. Bond yields also spike it up as well, which is very interesting because typically, like, okay, lower inflation is going to open the door to lower interest rates through rate cuts, right? Where we have more of a green door or more of an open door for rate cuts if inflation is under control. Yesterday, we had 2.8% CPI inflation, better than expected. Today, we had 0% month-over-month PPI inflation, which obviously opens the door to potentially more rate cuts. If inflation's under control, the Fed can more justifiably cut rates without the fear of inflation spiking. And so for inflation data to come in good and for yields to spike because of it is strange, because yields and interest rates typically follow each other. But hey, it's early. It's the initial reaction. There's a lot of variance that comes with it, so we'll have to wait and see what happens there. Well, bond prices should, in theory, be going up on this report. To be honest, inflation slowing down that rapidly might raise alarm signals for recession similar to 2009. Maybe. That's possible. Are we in a recession? 0% is low, man. No, we're not in a recession. We need 2 consecutive losing GDP quarters, and the last GDP report we got for last quarter was 2.3%. And so, no, we're not in a recession. Again, if you were one of those ones screaming they changed the definition, you got to go with the definition now. You know, you can't say they changed the definition and then, yeah, we're in a recession right now. I'm not saying that's you. I'm just saying I see that. Honestly, it's surprising how much I see that. But hey. Dude, you are jacked? What, is my face strong? You can't even see my arms, bro. What do I have? Is my face strong? Is my ears looking big right now? Definitely biggest ears ever. PPI already out at 0%. See, bro, I got it. Look, we got Foe here saying, isn't PPI already out? Why is he not updating the figures? You are late, brother. Hit the live button next to the play button. I told you somebody would do this. Hit the live button next to the play button. You are delayed in the stream, sir. Kindly hit the live button next to the play button. You'll catch back up. Strong nostrils. Listen, strongest nostrils ever. Top 3 biggest ears ever for sure. All right, guys, we're pulling back here, guys. We're pulling back. I made my money. I'm sketchy. I'm sketched out now. All right, guys, we're at the 200 exponential moving average. Oh, well, that's nice of her. She told the stream yesterday or last week you were jacked when you were on Top Step TV. That's nice, I guess. I'm not really jacked. I'm more in shape now than I was a few years ago from jiu-jitsu mostly. Like, that'll put you in shape. Where's Bitcoin at right now? Let me see. Bitcoin at 82.3 thousand. So Bitcoin's still down. Hadn't really reacted positively to this report. The question is, do I buy this dip right now? Guys, do I buy this freaking dip? I kind of think so, no? But I don't know, man. I'm going to wait, I guess. Market's just so variance heavy right now. Like, I don't know if the market fears a recession now or what, but... So we did buy this dip in our actual Combine account. So to get funded on this other account, we need to make, we're up 2,000 $562. So if I trade micro contracts and I make $400 basically, I get funded on this account. So let's try it. I'm gonna buy this pullback here, scale into it, small size. There we go. Buy at the top of the range. I guess it's a little sketchy, but hey, we're trying it. Okay. We're hitting my own resistance level, though. I'll cut it. We'll wait. Yeah, we need like $300 now. Thank to you. Hey, you're welcome to you. Bears and Bulls looking at each other like, I don't know anymore, bro. The big news is tomorrow's debt ceiling. Yeah, 100%. Voice, attitude, demeanor. It's great. What we all live for. Was that like a cheer? Hey, I appreciate it though. You know. Pro tip, throw a clock timer on stream. I did, bro. I did have a timer on stream. Rewind it to before the announcement and watch. Look at the timer. Here's actually a real pro tip. If you don't want to be delayed in the stream, put it on 2x speed. If you put it on 2x speed and you hit the live button one time, it'll stay up to date. You'll never be delayed on the stream ever. You'll be the top 3 most real-time viewer of my stream in the world. Bond yields still spiking up a little bit, guys. SPY is up to 558s. Gold is still testing those highs up there. The bond yields are at 43.45%. No, 4.35%. So bond yield spiking up right now, which is a strange correlation, but maybe people fear recession. Either way, even if the market did fear recessions, I would think bond yields following interest rates would be down because lower inflation means a higher likelihood of rate cuts because we can. And so it's strange to see bond yields spike, but I guess it's a different animal. I watch out, 100x speed, I'm in the future. Was that like an Arnold voice? I'm from the future. Bond yields prove my point. Yeah, maybe. You might be right. I think people are just trolling because you said something. I know, I'm trolling them back. That's kind of what I do here. Yeah. Ain't buying no deep right now. PPI at 0 means companies don't spend no money, meaning the downward correction will resume sooner or later. I'm short. Maybe. You might be right, Steve. I do think some people are in a recession, though, with the high inflation of the last year and a half leading to more. Yeah, but high inflation is a sign of a hot labor market, not a cooling labor market. But it can also, it can honestly be both, to be honest. Quote that. It can honestly be both, to be honest. But seriously, it could be both, right? Meaning high inflation might show signs of a weakening economy. You know, it could. Remember what stagflation is. Stagflation is the remnants of inflation problems, but also a weak economy. So stagflation is basically what happens with stagflation is that when the Federal Reserve gets really hawkish and they raise rates and they push the economy down a little bit, by the end of it, we're still left with the remnants of high inflation, but we also have a weak economy, and that's a precursor to a recession as well. And again, I told people before this inflation report that if inflation came in worse, a lot of people would be yelling stagflation. But I think it's kind of like a damned if you do, damned if you don't. I think people are going to be fearful no matter what. I think if inflation data comes in hot, people are going to be like, oh no, it's the end of the world. We got high inflation. If inflation data comes in low, people are going to say, oh, we're entering a recession. It's cooling too much. It's cooling too much. I think we got to be happy for low inflation, though. I really do. I think it's been 10% inflation in some years over the past 4 years. And so I think we got to celebrate lower inflation. Now we're still not at the 2% inflation target, but honestly, I don't even think the Fed thinks that we're going to hit 2% anytime soon. And they understand 2% is a little bit unreasonable. And 2% is not the good, like the line where it's good or bad. Honestly, under 3 is good. Under 3 is good. So inflation is actually in a good spot right now. And I know I can hear it now. Just me saying this, some people that don't really understand the context are going to say, inflation is good, bro. What are you talking about? Have you looked around lately? What I'm saying is that inflation's not going down unless we get a recession or depression. And so I would much rather us enter a recession and not have inflation get worse, which is kind of what, like, we're not entering a recession, but we see weak economic data right now. I would much rather it be like this than inflation spike up to some crazy, obscene level. I don't want high inflation. Inflation is a risk to everybody. But if we can get inflation slowing down, it's not going to go down, it's going to slow down. If we can get it to slow down to 3%, we're still dealing with the high inflation over the past 5 years. And that, I guess that's my point, is that it's more important to focus on stabilizing inflation over everything else. Because y'all don't want to see higher prices. Prices have 2, 3, 4x in a lot of industries. Y'all don't want more high prices. It's going to make the situation much worse, much more dire for people. And so, yeah, let's just, I think we should celebrate low inflation today. Yeah, jobless claims being lower than expected, showing less people filing for unemployment. 220 versus 225. That's good. Yeah. No room. Who? I mean, I remember Mr. Gaddy's Pizza from Louisiana. I'm from Baton Rouge. Cheers to Mr. Gaddy's Pizza. I remember that place. I remember this other place called Hoppers, too, which was more, I don't know if it was a pizza place or it was kind of like a Cajun Chuck E. Cheese. I don't know. Shout out to my Louisianians. Jobless claims is a week-to-week unemployment filings report. Do you listen to Boosie? Well, nah, I don't. It's not that I don't listen to him anymore. I'm just getting old, man. I'm just getting old. I do listen to some Lil Boosie songs, but everybody from Baton Rouge, everybody that in my generation, for the most part, with they're in general, you got some people that that don't, but most people from Baton Rouge listen to Boosie and Webby. You know, it's pretty normal. It might affect the market, Eric. With all the other data, the job numbers don't make sense. Yeah. Recession fears. We have a video on how to do support and resistance. Go look at my last uploaded video, KD. Yeah, the trade war is definitely heated up. We also had some news come out before all this data came out. And it actually helped me in my short position because it tanked the market. But the data, the president made this post earlier. He posts the EU has put a 50% tariff on whiskey, and he says, quote, if this tariff is not removed immediately, the U.S. will shortly place a 200% tariff on all wine, champagnes, and alcohol products coming out of France and other European countries, end quote. So that might also be some of the context on why the market's dragging down here. We also have some other news. We had PPI come out lower. White House is reportedly withdrawing Weldon's nomination as the director of the CDC, according to Axios, citing sources. Baton Rouge traffic. Yeah, man, I bet it was. Baton Rouge has some nasty traffic at 5 o'clock. 5 o'clock Baton Rouge traffic. I mean, I'm in Houston, so it's nothing compared to what I have to deal with if I venture out of the house at 5 o'clock. Really, it's like any time between 4 and 6, but yeah, Baton Rouge traffic sucks. Hey, thank you, better than you. Appreciate it, brother. Thank you, sir. Bitcoin making me mad, man. Sorry to hear that, dude. Could you talk about the US dollar? I mean, what do you want me to say about it? No, I listen to Boosie, don't get me wrong, you know. They say that I'm crazy, you know. I listen to Boosie all the time. Listen, I'm from Baton Rouge, Louisiana. Everybody that's from Baton Rouge listens to Boosie at least a little bit, all right? Everybody does. And so, you know. But it's definitely less than I used to listen to him. Amadeus starts share buyback program. Max investors of buyback program is $1.3 billion, decreasing the company's capital by redeeming shares. I hear a lot of people talking about a government shutdown next week. Do y'all think it actually gets shut down? I believe Chicago traffic is probably worse. All right, so we're bouncing back a little bit. We don't. Most of the data's already out, but is it tomorrow? Is it Friday? Or I think Monday is when people are talking about the market reacts negatively to this. But who knows, man? Yeah, so I think you might be right, Alden. My bad. You are correct. You're right. I'm wrong. You're smart. I'm dumb. You're very. What is the next quote? It's a Happy Gilmore quote, I think. Or no, it might be a Billy Madison quote. You're right, I'm wrong. You're smart, I'm dumb. You're very good looking, and I'm not attractive, is what it is. All right, so we're at 19,540s. So we're starting to bounce back some. Yeah, tomorrow. Okay, we'll see. All right, we're over the 200 EMA right now. I'm gonna buy this, I guess, but we're gonna scale in. We're already up big, and so I'm gonna take small size until we're green, and then we're gonna add some bigger size to it to give us the biggest chance of hitting this. I think this is a new this should be in everybody's system, is trading small until you have a cushion and you have like more edge, and then increasing size. But I've been using it a lot more over the last couple months, and I think it's helped. All right, now we're gonna add some 9 contracts, 12 contracts, and we're gonna leave it here and then be ready to exit quick if we need to. We got that 200 exponential right underneath us, so we should have a little bit of support there to prop us up, but we'll give it time. All right, there we go. All right, we're gonna add back to this now. There we go. Take some off. Take some off. 7 contracts here. We'll let the rest ride a little bit now. Yeah, we need like 200 bucks. That's it. So let's see if we can get it here. 10 contracts now. Oh, it keeps retracing back here. We'll add some to this. We'll get one more. Add down here. 15 contracts. We're flat. There we go. All right, we took some off here. There we go. Took a little bit more off here, but it keeps kind of backing up. We need 200 bucks. So we'll keep 5 contracts and just let this ride, I think. Very small amount. Like, we only need a tiny amount here too. But this is turning on me. Yeah, we gotta cut it. It's just dumping too quickly here. So we still only need about 300 bucks. Yeah, I mean, YouTuber, what you're saying is too vague. How do you make an instant trade instead of asking for confirmation? Like, it's such a vague comment. Like, again, and here's the thing, right? Like, people tend to think, number one, I am up on this specific account $1,255 on the day. All right, now it's a combine account, so it's a little bit different, but one losing trade, like we're gonna jump in and out of this with multiple confirmations. Like, we bounced over the 200 exponential. We got good economic data coming in. We got like a slight downward trend here, but we might actually buy into this. But I guess the point is, like, you can get confirmation in so many different ways in markets, bro. So many different ways in markets. It doesn't have to be like the perfect confirmation move that other people want. Like, everybody's different. Like, I think sometimes what happens is traders think that everybody has to trade their way. There's so many different ways to trade, man. So many different ways. There we go. All right, I'm going to add to this 12, 15. And I usually wouldn't do it. I would usually just lock in profit, but I need to make about 300. And this gives me a chance too, since we're up a lot. Oof, I don't like that at all. We'll give it a second though. Okay, we're back up. Nice. See, I really like this actually, but it's still struggling too much. Yeah, we're gonna have to cut it now. We're still up 1100 on the day. My big edge is usually after the opening bell, so I might want to just wait and take the big edge after the market opens. Oh, are you asking me how to do it without the pop-up? I'm not sure. You got to go to your settings and disable confirmation pop-up. Kevin Gates is better than Boosie. I mean, I don't know if he's better. I like Kevin Gates though. Like, I grew up listening to Kevin Gates. You know. See, my direction was correct here too. It hurts a little bit, but that's all right. We'll try to jump back in now. There we go. Again, we're gonna take 5 contracts, and then if we get a pop-up, we'll add to it. What the heck am I listening to right now? But no, I tend to like Kevin Gates more. Oh man, I look the other way and I'm down. It's a small size. I'll try adding to it, but it's risky. We're back to flat. Take that half off just to protect it now. We're so choppy. I'm hoping we break out of this choppiness now, but there we go. Cool. We did. All right. 7 contracts now. All right, locking more in here. Liquidate some of this now. I was hoping that we break out of this trend, and we kind of did, but yeah, we ended up locking in most of that. So we only need about 400 left. We got 30 minutes left until the opening bell. Yeah, tariff news, you know, again, threatening more alcohol tariffs is the problem. But the market tends to be reacting positively to inflation data, which is not a shock, right? Like, this is what I thought would happen. This is why we've been really buying. We haven't really shorted since this data came out, because I think that's the underlying edge of the day, is long when you get good stuff like that show up, you know? Like, the big edge is long. All right, so there's the market ripping up here. Look at this big pop. Market starting to bounce back some here, chat. Look at us tap this level here. Let's see if we could get over it. And we'll redraw this level if we do, like here. Look at this big surge of green here. I'm going to short. I know this is kind of a crazy short, but that's all right. Nobody has to understand it but me. 4 contracts. Take some off. Take some more off. Liquidate some more and we're out. Cool. Should have held it. That resistance level we got on our chart kind of guides me in the trade if you look at it. Don't copy me though. I'm not an investment professional. I have no freaking idea what I'm talking about. What's today? Thursday. Yep. All right, so let's see if we keep pulling back here. I'm here, guys. I'll be back in a second. Hold on. All right, market's still popping up. Let's see what we get. All right. I'm going to short this again too, but we're going to enter very small size here. Oh, wait. I want to see if it's a liquidity grab, but the SPY is starting to rip up. All right, let me see what Nvidia is doing up here too. The next resistance isn't until way up there. I don't want to get stuck in this. Let's take one off. Small. Yeah, we'll cut it. I don't use the CMB. I don't use the level 2 personally. Level 2 is highly manipulated to me. Not by them, but like level 2 in general. Like, okay, I'm going to preface everything I'm about to say with there's certain people that I'm sure can read the level 2. But to be honest, I think a lot of it's nonsense. You know, and you get people that like build their whole brand around reading the level 2, guys. And again, to be honest, I think it's just something that people either like the amount of manipulated orders on the level 2 is profound, right? Like there's so many manipulated orders. Like big money's throwing huge orders up. They're tricking little money into thinking all this different stuff. It's not actually filled orders. You know what I mean? So it's just highly like manipulated data. And so people that are like, yeah, I'm reading the level 2, I feel like they're just trying to sell you a course, and they're trying to sound smart, and they're trying to sound like they know what they're talking about, when really they're just kind of using it to try to look smart, right? But if you actually understand the level 2, you understand it's highly manipulated orders. Big money's doing all this crazy stuff. Like, you can either look at price data on charts that's based around that stuff, or you can look at numbers, abstract. It's much easier to just look at price data, in all honesty, from the charts perspective versus the level 2 perspective. What I mean by price data, I mean the chart perspective of price versus the level 2 perspective. But again, this might be wrong. I'm sure this is a controversial take because a lot of people have spent all this time and energy learning to read the level 2. But yeah, I feel like people are just trying to sell you a course on something, and that seems really complex. Like, you need to buy a course on it, and so that's what they're targeting, but maybe I'm wrong. It's not fake. I mean, some of the orders are definitely fake. And again, maybe I'm wrong. Explain it if I am. I certainly could be. This is the level 2 right here. Look. This is level 2 data. If I put it up on like the SPY, it'll be actively changing. It shows you the bid and ask. But you can kind of see how much this moves, and like you can look at this and try to figure out some edge with it, but to be honest, like, things are flashing so quickly. Like, big money's coming in. Like, it's just, I'm not going to look at this. I don't need to look at it. I'm not going to pay extra to look at it. I look at chart patterns. Hey, thanks, Pat. And with everything, with the context of everything I said, think about it like if you're a guru and you want to sell somebody a course, right? What are you going to tell them? You're going to try to make yourself look like you're a freaking trading genius. How are you going to make them look like you're a trading genius? You act like you can look at this right here and actually see some stuff. Like you're a beautiful mind, Like, look at the big run of orders showing up on the bid. You see this big wall right here of buyers coming in, stepping in, pushing this higher. And then look at this big sell. You got a big wall of buyers right here that's doing this. And I'm like John Madden over here on the level 2. I don't buy it. I feel like they're just making stuff up to try to sound smart to sell you a course. But maybe I'm wrong. I'd rather look at the time and sales, because at least that's actually filled orders. You know what I mean? Like, the time and sales is actually filled orders. It's actually, like, relevant. All right, bond yield still spiking up here. Interesting. Like, look at bond yields. Still going up at 4.35%. Can y'all hear my phone? I don't think y'all probably can, but... And again, if you want to check out Top Step's what I'm trading on. We got 20 minutes left. 20 minutes. No PDT and futures. You can day trade the S&P, the NASDAQ, the Dow, the Russell Gold. It's like a souped up demo account. They give you a 50K demo. If you can make 3K without losing 2K, 2 to 3, reasonable ratio, they fund you 50K, 90% split. If you fail, it's $49. It's not the end of the world versus funding your account 5, 10, 20, 30 grand and losing that, which is what's going to happen to a lot of traders if they try to fund their own account. Instead, try Top Step. If you fail, it's not the end of the world. If you pass it, 50K funded account, 90% split, you get to keep your first 10K. It teaches you how to trade under pressure where most day traders lose. It teaches you how to trade under pressure in a cheaper way. But again, they're an affiliate of mine. I am biased. Some would say I'm the top 2.5 most biased person in the world right now for them. But very useful, honestly. Genuinely, really useful. There's the link in chat if you want to check it out. Understand CFTC 4.41, all this stuff on screen. Not an investment professional. All right, so we are pulling back a little bit here. Let's see if we actually hold now, though. Yo, I'm definitely top 3 most biased person ever. But I tell you I'm biased, though. You know? Like, if I were you guys, I would rather listen to somebody that's honest with me about it. Like, y'all could either, you know, I could come out here and I could be like, yo, I like teaching, guys. I just like teaching. I'm not going to trade. I just like teaching. I'm doing this to help people out of the kindness of my heart because, you know, I'm just born that way. I'm just here to help people, guys. I'm not in it to make money at all. You know, I would never run this to make money, you know. I try to just be the best person I can be, you know, and help people. I would never do this to make money. If you want to check out Top Step, though, check out the link. Like, I would rather be with somebody that's like, hey, I'm biased. This is my sponsor. They pay me money. I'm biased. If you want to check them out, this is why it's useful. You know, go to the link. And again, I would trust somebody more doing it like I'm doing it versus acting like, you know, yeah, acting like Mother Teresa and like, hey, you know. Yeah, I'm definitely the top 3 most humble ever. Yeah. Do you have a strategy or do you buy on gut feeling? What's a strategy, bro? I don't even know what a strategy is. I don't even know what a stock is. I don't know what a futures contract is. I don't know what a candlestick is. I'm the top 3 least knowing person ever. But yeah, I don't have a strategy. I just say, you know what? I'm going to click buy right now. You know, I go pay a psychic, you know, lady on there. Like I drive by this place every day and it's like Moss Psychic Shop. And I stop in there and I'm like, hey, which way should I go today in market? Should I buy or sell right now? And she's like, today you should buy. And I'm like, okay, look, I'm going to buy up stuff right now. And then some days she's like, hey, you should sell. And so I'm like, hey, look, I'm short biased today, guys. That's how I get my whole trading. You know, I don't even know what a strategy is. I'd buy a course on this from you. John's Psychic trading course. Top 3 ever in parentheses. You know, that's how I'd market it. Yeah, exactly. Like Ryan Gosling in The Big Short explaining tranches. Would I buy a car from you? No. But is he right about, what does he say? Would I buy a car from you? No. But is he right about the mortgage market? We'll see. It's something like that. But yeah, that's right. I'm going to buy a crystal ball. I'm going to actually buy one just to use it on stream as a prop. I could write it off, you know. I could buy a nice one and just write it off. Business expense. Let me explain that to the IRS. Yeah, no. Somebody said I was jacked earlier. I almost responded with I'm jacked to the, you know, like Ryan Gosling, but I didn't. I get a magic 8 ball and just shake it. All right, guys. Market's honestly very choppy and flat here. I know I'm joking around a lot today, but that's because I'm bored. The market's very choppy and flat. Like, look. Since PPI inflation, up, down, is where we're at now. Looks like a M sign here. McDonald's. Green day today? Maybe. I'm green on the day so far, at least. I don't know whether I should buy this not now or wait, though. All right, guys. Hey, we got 15 minutes. 15 minutes. Let me change this. I forgot to change. All right, guys. So we are going to be trading live today. Trading live. PPI inflation data is out. Whew, let's do this. Let's see what we get today. Are y'all red or green on the day? I'm green. Are y'all red or green though? Let me know. All right, so I'm going to end this poll. We got almost 3,000 votes on this poll. Look at the 200 exponential here, man. I know I say this at least once a day. Look at that bounce. 200 EMA on a 1-minute chart. Thing's useful. Dude, I haven't had McDonald's breakfast in years. What was I about to do? Oh yeah, do another poll here. Do you think today's 0% print for PPI inflation is a bullish or bearish sign for markets? Bull, bear. I think that's a really good question for today. There's the poll. Vote on the poll. Let me know how you feel about it. Apparently the market does not care. So Patrick, I draw the levels myself. I'm not using Fibonacci's. I'm not using fib retracement or extensions. It's not anything that's drawing the levels. These are my own self-drawn support and resistance levels from the last couple weeks. And in fact, I need to honestly add a couple more here. I just use confirmations. So I look back on a chart and I say, where do we have the most confirmations? I would say we got a lot right there. And I just draw the levels based off of that. If we have like more than I would say 2 or 3 confirmations, I try to find like the, this is one right there too. I try to find like the median spot to draw it. Yeah. All right. And then if we like really don't respect one, I could delete it. But for the most part, I keep them up. All right, we got 11 minutes, chat. 11 minutes. Yeah, no, you're good, Patrick. It's all good, bro. The market is moving forward, looking beyond today's PPI narrative. Maybe that's true. You know, we got the shutdown looming. We got FOMC meeting next week, so that's possible. All right, so we are starting to flush and break down here. You know, we got 10 minutes left. I'm going to buy this. Very small. Leave it here. See if we get a pop back up. If we do, maybe I'll add to it. But if we don't, it's a small loss. There we go. Nice. The range is very small now, though, unfortunately. It's one of those situations where I hope my level doesn't hold here, but there we go. Nice. Alright, we ended up liquidating there, but very good. We ended up making like 27 plus 48 plus 13 minus 4, 5. So we ended up making 22 plus 80, right about $80. Very small, but we only need about $400 left, so I would buy this dip if we get one, but we only got 8 minutes left. I'm definitely not going to hold until the opening bell. 9 contracts here, 12, 15. There we go. Here, we took another piece. We only need about $300 now, which is really nice. I'm gonna go ahead and cut it because we're right at like my level here. So yeah, we only need about $200 now, or we need about 3. Hey guys, never trade 1,000 shares intraday. That's too risky. Well, I mean, I think it depends on the context. Like 1,000 shares, generic 1,000 shares, it can depend. It depends on the size of it depends on the range of what you're trading, you know? So like 1,000 shares of some stocks is not going to be much. Depends on this float size, depends on a lot of different things around it. Like 1,000 shares can actually be very small size in some securities with a larger float with a smaller range. But also 1,000 shares in something with a small float and a large range can be really risky, you know. So it's not you can't generalize it that way. I think it depends on the float size really and a lot of other stuff. Was John one of the ones advertising for FTX? No, of course not. I never advertised at FTX. Honestly, though, I don't really knock anybody if they did. FTX was on freaking MLB umpire outfits. Like, they were the biggest crypto exchange in the world. And so are we really going to criticize somebody that promoted them when they were the biggest crypto exchange in the world? Like, it's not like the people that were affiliates to them somehow had the insider knowledge to know that they were, like, you know what I mean? Like, at least not most of them. So I don't think we can really point blame at anybody for promoting FTX within reason, like affiliates. Now, if we're talking people who invested big money and hid a lot of stuff and knew they were sketchiness, that's different. But I think most affiliates are just affiliates. Like, I can't control what partners do. They're not going to tell me a lot of information. And so in FTX's terms, like, they were the biggest crypto exchange in the world. You know, can we really knock promoting them? No, I don't think so. I know it's easy to be frustrated if you lost money and want to blame somebody. But, you know, that's life. All right, market's still rising up. You know, and again, I see some people getting really mad that the market's going up. Listen, if you find yourself shorting the market long term, you're getting into one of the biggest sucker bets in history. Like, we might be going down too, but like there's almost no edge shorting the market long term. If somehow you find yourself in that predicament where you are betting against the market long term, again, huge sucker bet. Like the longer you hold it, the less likely you are to make money. And so it's just not something. Like, be smart, guys. Understand the biggest statistical edge is that the market's going to go up over time. In anything ever in finance, the biggest statistical edge is that the market, the S&P, the Nasdaq, the Dow, they're going to go up over time. It's an inevitability. Like, it's never 100%, but it's pretty freaking close. And so you got these people who watch The Big Short and romanticize it a little bit too much, and they will look at Michael Burry and they romanticize him a little bit too much, and they end up shorting the market long term and just losing. And then every time the market goes up, which is what it does, it goes up, they get mad and they criticize it. They say, what the heck? And again, I'm here to tell you, somewhere you've been misled. If you're so, like, it's hard to explain, but if you're desperate to be like Michael Burry, somewhere you've been misled. Michael Burry has been wildly wrong about market crashes over the last 20 years. The Big Short he was right on, absolutely. But he's been wildly wrong about almost every other crash prediction he's made since then. Where's Tesla at? Did Tesla bounce back still? I see a lot of stuff dropping right now, specifically AMD. Nvidia's still ripping up, though. Tesla up to 250s. Not bad. Yeah, JEP, you might be a little delayed on the stream, brother. But yeah, my point is that, like, if you find yourself shorting the strongest companies in the world, somewhere you've been misled. Now I'm okay with day trading, shorting them, or even like short-term swing trading. Do whatever you want to do. But if you're holding on to Tesla long-term short, if you're holding on to Apple long-term short, if you're holding on to Microsoft long-term short, it's just not the smartest trade. And again, I think people really want to be contrarian. They want to know something that nobody else knows. And so they end up just kind of over predicting crashes and betting against the healthiest companies in the world. And I think that's a sucker's bet, to be honest. You know. And those are usually the guys that get mad when the market bounces back. The only crash prediction or correction prediction I've made in the last 4 years, 5 years is in December. I told people I thought the market would correct sometime soon. And we did. But I don't think people should overpredict crashes. I think most of the time the market's going to go up. And you don't want to discourage people from investing, which is the true edge in finance most of the time. What was Michael Burry wrong about? Well, let's see. So a couple years ago, Michael Burry, during an FOMC meeting, told everybody to sell on his Twitter page. During the FOMC meeting, the market ended up ripping up about 6 or 7%. And so Michael Burry got emotional, deleted that Twitter post, and deactivated his Twitter account, and then later came back and said, hey, I'm sorry, I was wrong. I shouldn't have told everybody to sell. Now, take what I just said and multiply that by about 10. And that's what Michael Burry has done since The Big Short. Like, what happened to Michael Burry is that Michael Burry was correct when a lot of people thought he was wrong. He got sued by his best friends that he ended up making billions of dollars for. That has skewed him so much negatively that he's just wildly overshort now. And he bets, the common joke about Michael Burry is that he's called 25 of the last 2 market crashes. And so basically, he wildly overpredicts crashes. You know, it's how it goes. It's how it goes. You know, I can't even knock him for it. If I was him, I might be skeptical too. Anyways, market's starting to break down. There's the opening bell. Tesla falling down a little bit. Let's see if we hold now. I don't want anybody to copy me. Not an investment professional. Don't copy me. If you copy me, you'll probably lose. Don't do it. Understand CFTC 4.41. Hypothetical or simulated performance have limitations. Look at this candle, guys. Look at this huge candle showing up in markets, guys. Wow, look at this big old candle showing up. It's the opening bell, though. I'm not going to take any trades until at least 4 or 5 minutes after the open. And again, with the context of everything I just said, we might continue to correct. The market's on a 15% correction right now. You know, we might continue. But we might not as well. We might bounce back. I don't know. I don't know when's a good time to DCA. I really don't. I don't know when a good time to DCA is. I don't know when it's the right move to DCA. I think right now, to be completely honest, there's a lot of volatility with the tariffs. Every day there feels like a new one, a double, triple tariff, like all this different stuff going on. And so that's influencing markets in a really weird and variance heavy way. And so I really don't know when the good time. It depends on how long you're holding it. I think if you're holding something over a 10 or 20 year period, it's always a good time to DCA. Because you're almost certain to make money over that period of time, regardless of what the market does. But if you're holding something shorter term, it depends. It really depends. I don't know. And again, I'm okay with being short term. You know, the people that bet the market short for years and years and years. Again, you get a lot of YouTubers that do it. They just kind of bet the market's going to go down. Every other week they're posting this is going to crash the market, ... You know, and then the market rips up 5% and they post another video. And then eventually the market does dip 5% and they sit there and try to act like they were right, even though they're basically just were way over where they predicted it at. You know, it happens a lot. So I discourage that. I don't want that to talk people into missing out on some edge. But at the same time, I do think right now the market is really sketchy. The tariff news and all the stuff going on with that makes the market really sketchy. All right, look at this big drop. Well, dollar cost averaging is making periodic purchases of a specific security regardless of price. And so an example of a DCA strategy would be, hey, I'm going to buy 50 shares of Apple every week, you know, regardless of where it's at, up or down. And the overarching point of DCAing is to curb volatility, you know, because if you buy it regardless of price, it doesn't matter whether it's going up or down, you're averaging into it over time, and that reduces the swings that you make in those trades. And again, long term, it doesn't matter, right? But even if you're DCAing short term, there's still risks if we continue to correct, to be honest. People are going to run out of money eventually, you know, and so like you can make 50 shares a week DCA strategy, but if you do it at the wrong time, it's still bad, you know. So it depends on the context of how long you're holding it, though. If you're holding it a longer term, it doesn't matter. Look at this big pop. How can your level line be so right that it catches the candle wick? Because, dude, my levels are just on point, man. That's what I'm telling you. People try to criticize my levels, but, like, dude, I drew this level, what? Well before this. Look at this spot. You love to see it. Top 3 greatest leveler of all time right now. Netflix is popping up. Look at this. I will buy a dip now, to be honest. I need a dip, though. That's enough of one. I'll buy another. I want a larger green amount, though, so. There we go. I hope I'm getting good fills here. Okay, good. I was about to say, they better give me some good fills. I got 9 contracts here. We'll take 15, but we got to be very careful. Oof. I'm hoping it retraces. I got to take half of that off here, man. That was a nasty retracement. Alright, I'm about to probably start day trading our regular account. I'm going to get out of this. There's just too much. We're still green on the day, but man. Let's try micros now, small size. There's the bounce we wanted to. Just kind of got a little faked out here. Market started to turn. Look at this brutal red drop here. Did something happen? I don't know. It might just be the market's down. Honestly, the market's really choppy. Netflix is up big. A lot of stuff just turned. Tesla turned. AMD turned. Q turned. Gold spiking up a little bit. Netflix is down. SPY is down. Yeah, no, honestly, the chop is insane today. Your levels are good. So many haters, John. I definitely got the largest amount of haters in the world right now. Honestly, it's probably just one person. Like I said, I probably know him in real life, and he's just unhappy with himself or whatever's going on. The biggest haters are actually people who have tried to be YouTubers and failed at it. Like, there's a couple people who, like, they got down, like, the conspiracy rabbit hole of, like, YouTube hates me. And then they just, like, I think it's a really hard thing for them to accept. And so I think they just kind of lash out at other people sometimes, is really what it is, you know. My hands are off right now, though, in my funded account. We're just catching chop today. We're just catching chop. Yeah, I'm waiting on my actual funded account. So Andreas, we have what's called daylight savings time here in the U.S. And so daylight savings time here in the U.S. happened. And we time jumped forward. It's called spring forward. It happens every spring. Yeah, I think I might have a little bit too many levels here, though, to be completely honest, on this chart. I'm going to remove this level here. We are in this like weird slight downtrend here, though. How are you guys doing today? Good day to drink coffee and watch. Chop you out, yeah, for sure. Am I smug? Am I too smug? Honestly, most of the time I'm being sarcastic. Like, I've kind of made a theme of my channel, kind of like a trading brat, and so it's like sarcastically smug. But I think some people don't understand sarcasm, or they think I'm being serious when most of the time I'm trolling and just like I'm being sarcastic most of the time, or ironic. It's kind of how I am in real life. Like, I do the same thing with my kids. I act like I'm just the greatest ever at everything, but most of it's just trolling. That's where the top 3 thing comes from. Keeps it fun. Tesla breaking down, though. Tesla at 240s. AMD at 99.50s. Gold at 229.60. Apple at 216. So Apple's actually down a big amount too, man. Apple dropped a lot yesterday when everything else was, when Nvidia ran up yesterday, for some reason Apple dumped pretty big yesterday. Yeah, I'm just trolling the trolls most of the time. They can't take a joke. Your sarcastic people can't handle. Yeah, for sure. Top 3 most sarcastic, yeah, ever in the world. VIX is dead range. I'll buy this here. This is our first buy with our actual funded account. Let's see if we can get anything good. We're going to start small, build up a cushion in our actual funded account here, but the variance is so heavy today. There we go. All right, we just made about $25 per one contract here on our funded account. I'll take it. We caught the bounce, 525 level here, so we popped over this and bought it. I should have held, though. Look at that rip. The European President Commissioner von der Leyen is going to announce a new European 4.7 billion investment package from South Africa. The president posted again. He said, quote, "The U.S. doesn't have free trade. We have, quote, unquote, stupid trade. The entire world is ripping us off," end quote. Again, I didn't say this. The president said it. I'm just quoting him here. Hey, Mr. Beginner Trading, thanks for the spam buy and spam sell method, bro. This is printing money. Are you talking about Ma Psychic Shop? Is that what you're talking about? All right, look at the market fall down here. Again, we got out, so we're green on the day in our actual account. We've been trading on a combine most of the day. We'll see if we can get anything going. But you can see we're green at the top. Look at this red candle here. Is this from the quote or what? Eesh. Yeah, again, look, while the biggest edge long-term is on the upside, let's talk about the other side really quick just for balance here. You got a lot of stuff looming right now. You got potential government shutdown starting tomorrow. You got tariff tweets and posts daily here, daily. We have big 15% correction in markets coming in. We got a lot of people saying the economy is slowing because of the low inflation numbers that we got, specifically producer prices showing up at 0%. Now, I think generally that's good, but we got a lot looming right now. We got the Fed meeting next week, retail sales next week, Michigan consumer sentiment and inflation expectations tomorrow. So we got a lot of stuff looming in economics and markets right now, guys, that could drag the market back down. And again, the big question at this point in time is, will this big, massive 15% correction continue down after a day? Look at this drop here. So we are cracking lows of the day here. We are now down. I mean, I have my funded account here, but I haven't DCA'd into it, to be honest. Really, I've only taken one micro contract position here. I'm trading very small. There's a lot of volatility today, to be honest. I got to draw some new levels here. We're kind of under where I'd drawn levels previously. All right, we tapped my level again. Look at that. I just drew that level too. Doesn't mean we're going to hold them. Even if you know where things might take a little stop, like a little detour in price, it doesn't mean it's going to hold over it. Like, look, we tapped off at the level I just drew here, but it doesn't mean it's going to stop here. We might keep breaking down. We might bounce right off of it, though. Let's see. I was about to short here, too. I should have maybe. Let me move that up. Nah. You just rip past this one. Might remove this one, though. That one held. Honestly, the market's so volatile. All right, guys. Yeah, I'm looking at some other stuff here, but is this Christmas music? It is. All right, guys, my bad. We need a Powell cut. Powell's not going to cut. I hear some people screaming emergency cut over the last few days. Why would we ever emergency cut? All right, look at this big bounce. I kind of like this short, but the range is so high today, to be honest. I don't mind shorting down at this level here if we get a pop up here, but look at this bounce right there too. Look at that. I had one at 482, so we'll also watch that level, see if we want to redraw the level there. No, I think we're going to cut in like June, so I think we got like 3 months until a cut, to be honest. The likelihood of a pause has actually increased, which is strange that like we're seeing hawkish reactions to lower inflation data by the Fed. The next cut is going to be in June. Almost certainly. Let me look at May. So yeah, May, in May we got a 30% chance of a cut. It's probably going to be in June though. Like look, in June we got a 60% chance of a cut in June. It's going to depend on what the data shows, especially if we continue to see good inflation data and weak economic reports. We're almost certain to cut in June. I mean, we're definitely not going to cut this week. Or next week, I mean. Again, if you haven't already, check out Top Step. This is what we've been day trading on today. We got our second short in the books here. All right, another $20. Quick little scalp. Not bad. Small little steady gains today, but very small. Again, if you want to check out Top Step, they give you a 50K demo for the base one. You can also get a 100K demo, 150K demo. Costs a little bit more, but if you want larger size, more room, you can. 50K demo, you got to make 3K without losing 2K first. If you follow those rules, they fund you 50K with a 90% split, and they've paid out almost $200 million since 2020. If you fail, again, here's the way you got to understand. Almost all day traders are going to lose. 90% of day traders lose. The 10% that do make money, it takes them years to learn, and most of the time they lose money that entire time as they're learning. It's a skill you can have for the rest of your life, but if you lose too much money in the beginning, you're just going to walk away, right? It's one of the reasons this is useful, because you can get through those year or two that it takes you to learn how to trade with smaller size, with less risk, instead of needing to deposit. And trading is all about learning how to trade under pressure. Instead of having deposit 5, 10, 20, 30 grand, learning how to trade under pressure. That way you can try this out. It's $50. You're still risking something, so you're still learning how to trade under pressure, but the risk is noticeably less, but it teaches you how to trade under pressure with less risk. That's the beautiful aspect of Top Step, is that the base one's $49. That's your risk. If you fail it, they give you a practice account. You can practice afterwards with real-time data. If you pass it, you get a 50K funded account with a 90% split. And this is the futures market, so you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. No PDT rule. Just a great way to learn. And most day traders are going to lose, including here. It's a lot cheaper to lose here, though. But this is my last plug of the day. Definitely one of my top 3 plugs of the day. Understand I'm biased. I get paid by them. So there's the link if you want to check it out. Understand all these rules on screen. Not an investment professional. I'm biased. Understand CFTC 4.41. Hypothetical or simulated performance have limitations. Anyways, guys, market's cracking lows again. We're slightly green on the day, very slightly green. Market watch, Martin. And tomorrow we got consumer sentiment data at 10, which is big. All right, look at this bounce off of 442. So again, the level held. He's biased, but humble about it. Yeah, I mean, some would say I'm like the most humble. You know, I hear that like ringing in the streets, like John Beginner Trading. He's so humble. I mean, I have to agree with that. All right, guys, we're breaking down. We'll crack these lows. Let's see if we continue down. Market's looking weak. Nvidia is still testing that 115 level, still slightly red. You can see the previous closing price right here on Nvidia at 115.71. So we are breaking down underneath that. I better draw more lines. No stopping anytime soon? Yeah, no. Like I said, it might take a little detour at my levels, but that doesn't mean it's going to hold under them or over them. It might just keep on falling, which is kind of what it is. The pressure's showing up now. All right, so another tweet. He posted a quote from Grant Cardone on Cardone Capital. He said, quote, Canada needs America. America does not need Canada, end quote. I'm not saying, listen, I love Canada. The land of Canadiana is the greatest place to eat, I would say. I've got family from Canada. Good people. Nice place. You know. Yeah, don't copy me, YouTuber. I'm not an investment professional. I'm not liable if you lose. Oracle is reportedly leading contender to help run a new deal in TikTok, according to the information. All right, Tesla still breaking down. It's at 237s. Louisiana speak French, right? Well, not like it's different. It's different. All right, so look, here's my other level, but we're just kind of breaking down through this one, it looks like. Look at this red action. Wow, dude, look at this. Does the correction continue today, you guys? The data might be, listen, I'm not saying it is, but the data might be in big yellow letters right below me right here in this area. It could be. All right, so we tapped at right around 400. We're starting to bounce back up a little bit. Will this red action stop here, guys? This is brutal. Yeah, I don't know. I was trying to say something like they were the greatest ever, Liberty, but I couldn't really think of what it is. I was gonna say they're the greatest ever of something, but then when I went to pull whatever they were the greatest ever in my mind, I just couldn't think of anything, to be honest. Don't get mad at me, Canada. Listen, I love you guys. They're the greatest ever producers of maple syrup in the world right now. And they're honestly really nice culture in Canada. I like Canada, actually. I got family from Canada. My stepdad was Canadian. I've lived in Canada before. Maker of poutine. Yeah, there you go. Thank you. Yeah, I mean, don't get mad at me. I'm just joking around today. I'm not really interested in trading this big volatility. It's kind of risky. I'm green on the day. I'm gonna try to just sit on this. Yeah, I don't know. I hung out in Ontario, Canada. It was nice, good people. Why are you scared of crashes? I'm not scared of crashes. Honestly, I predicted this correction. I stopped buying in December. I was right. I told you guys this over and over again. Y'all will never hear the end of it. I told you guys. I'll say it over and over again. But man, this is a bloody red market. Wow. Let me see if there's a reason for this. There's got to be some type of fundamental reason. Is the U.S. battling with Canada and tariffs the reason for this drop? Look, we've honestly broken down below any of my levels here. So let me look here. This is a really interesting chart right now. So here's the SPY. The lows of the latest correction were at 551s on the SPY. So we still got a ways to go. What about the NASDAQ, which is a little bit more tech heavy? 470. 467s were the lows. So this is the low of the last couple months, really. Down here at 467s. What? No. All right, so this is the low of the last couple months right here. Still flushing. I'm gonna buy this. Kind of risky, but it's all right. I'm catching a fallen knife here. We'll play with it. All right, another $20. Honestly, we're getting it out quick here. I don't trust this at all. Not bad though. We got a little cushion on the day. It's not a major dump. It's not 1% yet. Yeah, it's 1%. The NASDAQ closed at 477s. 1% would be roughly a $4.7 drop in the NASDAQ, and we are down to 471s. So we're right around 1%, you know, I would say. Give or take, yeah, right around 1%. If my math is right, which I think it is. Right around 1% drop. But it's more so about the sentiment of everything. Like lower inflation data, market was already on a 10 to 15% correction depending on which index you look at, and now we're getting a continuation of that. And so if we start to test the lows of the last few days, a lot of people are going to get bearish because they're going to consider this correction as continuing to the downside. And Nvidia's given back the gains that it made, the rebounding gains that it made, which is bad, of course, right? The NASDAQ, if we take a look at the lows, the lows of this whole move right here are down to just over 19K. And I know I got a lot of lines on my chart because I usually scalp, so we got a lot of lines on the chart. I'm gonna have to remove some of these though. But we're getting pretty close to like some of the big lows of the last couple weeks. And if we do that, a lot of people are gonna be worried the correction's continuing down. Yeah, again, guys, that's why I try to tell people, like, look, I got out of a lot of stuff in December. I got pretty flat in December of this past year. And I've been pretty outspoken about it, of course, because it feels good to be right, to be honest. I mean, it feels good to avoid a correction like this and be right, to be honest, of course. Anybody else, you'd feel good too. But I've been thinking about buying back into stuff, but I haven't yet because I think we got too much economic stuff coming out. And like we got the Fed meeting next week. The government shutdown's looming, and I think if that continues to get bad, we could get forced back down into the correction. I think once we start that correction again, who knows where it's going to stop. And so I am still kind of holding and just waiting right now. I'm just kind of waiting for stuff. I'm day trading like I always do, but I'm not really adding back size. I'm not jumping back into anything yet. I'm going to wait. All right, so I get some people asking. All right, so the Treasury Secretary says the administration is focused on the real economy, according to CNBC. All right, so over the past few days, discussions around a government shutdown have intensified, primarily due to partisan disagreements over a funding bill specifically. On March 11th, the Republican-controlled House of Reps narrowly passed the full-year Continuing Appropriations and Extensions Act of 2025 with a 217 to 213 vote. Again, a very narrow pass. This legislation proposes to extend government funding at largely current levels through September 30th of this year. Notably, it includes a $6 billion increase in defense spending and a $13 billion reduction in non-defense expenditures. The bill excludes earmarks for community projects and maintains funding for mandatory programs like Social Security and Medicare. House Speaker Mike Johnson introduced this bill to avert an impending government shutdown, emphasizing the need to bolster the defense budget while implementing fiscal restraint on domestic programs. He expressed hope that the Senate would act promptly to pass the measure. However, the bill's prospects in the Senate appear uncertain. Senate Minority Leader Chuck Schumer has declared the Dems will block the drafted funding bill, criticizing it for lacking bipartisan input and disproportionately favoring the defense spending over essential domestic programs. He advocates for a shorter-term funding extension, suggesting a one-month stopgap to allow more time for negotiations on a comprehensive bipartisan spending plan, according to the New York Post and Financial Times. This government funding is set to expire at midnight on Friday tomorrow. Without an agreement, a partial government shutdown would ensue, leading to the suspension of non-essential federal services and furloughs for numerous government employees. The Senate requires a 60-vote supermajority to advance the funding bill, necessitating support from at least 8 Dems. However, internal divisions in the bill's partisan nature have made securing these votes challenging. As the deadline approaches, both parties face mounting pressure to reach a consensus to prevent disruptions in government operations. The ongoing impasse underscores the complexities of federal budget negotiations and the critical need for bipartisan collaboration to ensure continuity of essential public services. So yeah, basically, they can't agree on a bill, and if they don't agree by tomorrow at midnight, government shutdown, at least a partial one, is happening. And so that's where we're at now. Market has kind of bounced back a little bit here. So Nvidia's still breaking down, although we're back up a little bit here. That's good. But again, that gov shutdown unknown is making me a little bit more cautious, I think. Yeah, well, they'll eventually get it done. It's always looming, and they're arguing, and then, oh, we may get it done. But at the same time, though, I think there's a lot of bureaucrat, drama right now. And so if there was one that they would actually want to stick it to them, this might be one of them, and that's the only thing I worry about. Here's a bounce back, though. So we are getting a bounce back, a rebound back up here. NBP's Glopinski says stable rates is necessary to reduce inflation to target. Yeah, I'm not sure what you mean, Lewis. He says, does anyone know who controls stock up or stock down? Who makes the call? Buyers and sellers do. This is the NASDAQ 100 futures contract. So buyers and sellers dictate where the market goes. All right, I'm slightly green on the day. I don't think we've had any red trades on our actual funded account, but we've been trading very small. All right, guys. So again, we are breaking down a little bit here. How you guys doing today? It's it's almost 10:10 right now. Gold started to bounce back up too. Yeah, I'm kind of in this unknown spot. I feel mostly bullish now. I think we will be getting mostly good news. Would a government shutdown largely affect the market? Yes. I've been through these before where there's potential government shutdowns, and generally like the recipe for this is that the shutdown is looming. Oh no, there's like a correction happening in markets. Nobody knows what's going to happen. The shutdown is here, you know. As we get closer and closer with no agreement, markets typically get some bearish reactions. And then right at the last second, they get the deal done and the government shutdown is averted and confetti gets thrown around and the market bounces back a little bit. That's generally how they go. I've seen a couple of, I've experienced multiple different situations like this in markets. I think this context is different though, because we got all this stuff going on. So we've got the big correction that we've already experienced regardless of the government shutdown. We've got tariff battle, trade war. We've got microchip corrections. We've got the Fed meeting next week. We've got inflation data this week. So it's just a little bit different of a landscape, but I still think that's probably going to happen, which is meaning I think we're probably going to get the deal done and the market's going to be fine. It might drop a little bit if we continue to edge closer to that shutdown tomorrow without getting the deal done. But we'll see. We'll see. You know, if Monday, if it's still there Monday, then we're probably going to see some corrections in markets, but who knows? Got to give John his flowers. He indeed predicted a correction was due in December 24. That's one reason I became a temporary bear. Have short positions since mid-January. Imagine that. Your top two, man. Hey, thank you, Steve. Appreciate it, brother. Yeah, I mean, like I said, man, people like to hate, but, you know. Again, I've been widely critical of people over-predicting market crashes in the last 5 years. And so one thing that I saw is that a lot of people that watch my stream, when they heard me actually predict a correction and said, hey, I think things are up too much, I'm bearish for once, I think a lot of people listened because I am so outspoken on the other side usually, which is criticizing people over predicting crashes. But this time was different, right? Like the Nasdaq's up 105% in 2 years. I think a lot of it mirrors the AI or the .com crash that we got. And I hope it doesn't, because the .com crash was a very long-term market correction. But you know, you never freaking know, man. I think AI is a great technology, and I think it's the future, and I think over the next 5 years, it's only going to get better. And so we'll see what that looks like. But I'm going to get out of here, guys. Listen, I love you all. You'll have a great day. I'll be back tomorrow bright and early. So we will be back tomorrow bright and early. Y'all be safe in these markets. Very, very volatile market. Y'all be good. Y'all be safe. Love you all. Appreciate the love and support. And yeah, I'll see you guys later. Y'all hit that like button. Hit the subscribe button. I'll see you guys tomorrow. Again, we got Michigan consumer sentiment and inflation expectations next week. We got the Fed decision. So I'll be ready, guys.